Who doesn't want to invest in the stock markets and get rich? Every day, the news is littered with information about the ups and downs of major stock exchanges. Moreover, more and more people are learning that the wealthiest people on Earth created and hold most of their wealth in the forms of stocks, bonds, treasuries, and options, a fact that is leading the masses to become even more fascinated by stock exchanges and willing to invest their entire savings in the stock market. Today, I will not tell you how to invest and maneuver around stock markets. I'll leave that for another video, but instead, I'll focus on presenting to you the history of stock exchanges since their inception. Let's be honest, learning about some history and evolution through time is the first step you should undertake before you invest in it. I'll explain what stocks and stock exchanges are, and then I will cover the interesting and unique historical evolution of stock exchanges. Allow me first to give you a quick glimpse of what a stock, aka security, is. A stock or share is one of many types of securities out there. It is simply a small piece of a company. When a company wants to go public, meaning allowing the masses to own part of it, which is a main corporate strategy used to raise money, it undertakes a few steps. Number 1, it gets an evaluation by regulators, analysts, economists, and rating agencies. They help the company decide how much it should be worth, the number of stocks it should issue, and the initial value of each stock. Number 2, once the company has the needed approval and authorization in place, it announces the date for an initial public offering, IPO for short, which is the date on which it will be listed on a particular stock exchange so that people can buy its stocks. Number 3, once a company is listed, people simply start buying its stocks, and the value of its stock will go up when the demand is high, as more people are willing to pay more for it, and goes down when the demand is low or shareholders are selling. So what is a stock exchange? A stock exchange or stock market is a physical or digital place where investors can buy and sell stocks, which are also known as shares of publicly traded companies like Apple, Amazon, Twitter, Volkswagen, and any of the other thousands of listed companies. The price of each stock is driven by supply and demand. Alright, I'll tell you now about the interesting, unique historical evolution of the stock exchange. Moneylenders in Europe, the Venetians in particular, were the first to act like today's stockbrokers. In the early 13th century, they would carry slates with information recorded on them and meet with their clients, pretty much like what brokers do today. The Venetian moneylenders were the first to trade government debt issues that would be considered government bonds today. They even sold debt and government issues to regular people. However, everything was done in person, and they had no centralized meeting places. Hence, they might have given birth to the idea of a stock exchange for bonds and treasuries. However, they did not have nor create one. In 1531, Belgium established what would be considered the first stock exchange, called the Antwerp Bourse. They created a centralized place where moneylenders would meet and exchange transactions with debt issuers such as businesses, usury oligarchs, and the government. Some historians would say that wouldn't constitute a stock exchange because only promissory notes and bonds were traded back then. However, other experts and historians disagree. They cite that bonds and promissory notes are, just like modern stocks, considered securities, and the fact that real stocks did not exist back then. At the beginning of the 16th century, companies that specialized in the trade and transport of goods and commodities between East Asia, India in particular, and Europe were suffering from raids by pirates on their ships while at sea, in addition to problems caused by incorrect navigation and rough seas. So to reduce their risks and losses, they created what would be considered today limited liability companies. They would seek investors to cover the cost of a particular single voyage in return for a percentage of profits if it was successful. They even gave investors the option of spreading their investment over several voyages at once, similar to what is called today an exchange-traded fund, ETF for short. However, all that changed a few years later when the Dutch, British, and French governments began charting these companies. So any company with East India in its name became more independent in raising funds. Hence, they began issuing stocks that would pay dividends on all the proceeds from all the voyages the companies undertook, rather than going voyage by voyage. The first sort of modern stock exchange was created in Amsterdam after the Dutch East India Company became the first publicly traded company. It was the first company that decided to sell stock and pay dividends of the shares to its investors. This was followed in 1611 with the creation of the Amsterdam Stock Exchange. For many years, the only trading activity on the exchange was trading shares of the Dutch East India Company. Such a move was followed by the creation of similar stock exchanges by various countries. Investing in stock exchanges became a trend among investors during the 17th century. However, the lack of regulations and rise of fraud led to what would be considered the first stock market crash in 1722. The British East India Company monopolized the market. The success of the British and other East India companies led to the creation of the South Seas Company in 1711, which was chartered by the King of England. The company generated immense wealth from its slave trade. For example, it provided the Spanish with thousands of slaves annually for the Spanish plantations in Central and South America. I'm obligated to mention here that all trade by all East India companies and others over a period of a few hundred years was focused on transferring the wealth of other nations, colonies, to Europe in addition to the trafficking of African slaves. The number of slaves moved by these companies over nearly 400 years is somewhere around 200 million. Some put the figure at 400 million. The entire wealth created by the Europeans and North Americans during these times was based on stealing the riches of many nations, wiping out as many as possible of the indigenous people, and enslaving the remaining population. The first stock exchange in London was officially formed in 1773. 19 years later, the New York Stock Exchange, NYSE for short, was created. The NYSE wasn't the first stock exchange in the US because the Philadelphia Stock Exchange was created 2 years earlier in 1790, but the NYSE quickly became the most powerful. The world of trading securities continued to grow and become more complex. London became the major exchange for Europe, but many companies were also able to list internationally through the New York Stock Exchange. Other countries, including Germany, France, the Netherlands, Switzerland, South Africa, Hong Kong, Japan, Australia, and Canada, developed their own domestic stock exchanges. As these new domestic exchanges grew in size and value, they would go international by linking to the London Stock Exchange, and from there to the big leagues of the New York Stock Exchange, which continued to dominate the international world of trading securities until 1971, when the National Association of Securities Dealers Automated Quotations, aka NASDAQ, was established. Since its inception, the NASDAQ was a different type of stock exchange. It did not inhabit a physical space. Instead, it was a network of computers that executes trades electronically. The introduction of an electronic exchange made trades more efficient and reduced the bid-ask spread. The competition from NASDAQ forced the New York Stock Exchange to evolve. Today, the NYSE is the largest and most powerful stock exchange in the world. Today, there are more than 650,000 companies that are traded publicly throughout the world. Anyone on the face of the planet with a bank account and/or a credit card and internet can find with great ease online brokerage accounts and trading platforms. Register with one and begin trading all sorts of stocks, bonds, ETFs, options, commodities, and other securities. Would you like to learn more about business, entrepreneurship, and personal finance? Click on one of the videos that showed up on the left or go to our channel to find other interesting topics.